Okay, and then the last thing that we will cover are the pros and cons to paper trading. So I put the pros over on the left and the cons over on the right. So let's look at the pros first. Obviously, there's no risk involved here. You're not using your real money. You can paper trade as if it is your real money, but it's not. So when you have losing trades or you make mistakes, there's no money ramification, right? So no risk. No stress. Now, I got these pros and cons from Investopedia. No stress. This all depends. If you use Investopedias and you're doing a game, there could be a little bit of stress, right? But typically, yeah, when you paper trade, there really is no stress because there's really nothing on the line. So you can trade with what seems to be confidence, but in a lot of ways, it's not. It can seem like you're very confident to make the trade, but emotionally there's nothing tied to it, right? So now it does build practice and confidence, and that is true. The more and more you paper trade a strategy, the more and more you will build confidence and you build your skill set. So just the simple task of buying a call option, it can be daunting in the very beginning, and when you do it over and over again in paper, when you do eventually switch over to money, there's a lot of things that will not be daunting to you. So just is this going to work out correctly? What are my max losses? How much am I risking? That kind of stuff. That stuff you're going to build a lot of confidence and you're going to build your skill set using the paper trading account. And then last is statistics, and really this comes down to just being able to keep track of what you're doing. If you take really good notes and you keep a good trading plan, and you kind of manage all that, so every time you go to place a trade, you create a trade plan, and you mark down. One of the things I show my students in my Excel spreadsheet is that I put down what my emotional state is when I'm placing the trade so they can kind of see my thoughts. I put down what my plan is when I'm placing the trade so they can understand what I'm looking at and what I'm going to do depending on the certain outcomes that come out from the trade. And if you do this with paper trading, you're going to build up a statistical platform, so to speak, or system that shows you how well you're doing. And I think one of the bigger mistakes most people make is they paper trade for a month or two, and then that's it. I actually paper traded for 18 months. It took me a good 3 years to become very successful. I won't say very successful. It took me 3 years to become successful at trading options. The first 18 months was paper trading. I never risked a dime of my own money. And that may seem like a lot of time. I can tell you it goes by quick. I can't believe I've been doing it for a decade now. It goes by very, very quickly. It'll go by even quicker if you choose not to paper trade and give yourself plenty of confidence and skill set before investing your money. And the reason it'll go so quick is because you will probably switch over too quick and you'll blow out your account and then you'll quit. I've seen that happen many, many times. So don't rush to profits here. Paper trade until you've built enough of a skill set, enough of a confidence and statistics, and you've done it correctly that moving over to real money can be a much easier transition. Now let's look at some of the cons. So it neglects market correlation. What they're talking about here is that sometimes you don't see the exact same things you would see within a real trading account based on what the market is doing. I can tell you the ThinkOrSwim platform is pretty good, but yes, there's going to be times when it does things that don't happen in my real account. But for the most part, this is very minimal. Um, the next one neglects slippage and commissions. Slippage, I'm not exactly. I was reading about this, and this is on the Investopedia page. Let me go over to it. You can see it here. Um, and this is what it talks about. It's talking about wide spreads. They're poorly captured for most paper trading techniques. So a lot of time, and here's how they're talking about it. For example, the momentum stock you think you're buying on paper at $50 may cost you $50.50 or more in the real world. And I think what they're talking about here is the bid and ask spreads. So when you look at an option chain, you have bid and ask, okay? And so we always buy at the ask and we always sell at the bid. And so they might be talking about the bid and ask spread here. Now I tried SPY and SPX, so the bid and ask is very minimal. You can see, look at this. This is actually high right now. Normally when I'm trading SPY, especially when you get into like really short term, like if I'm going to sell a call option, covered call, you can see, look at the bid and ask spread is only like a penny. So there's not much of a bid and ask spread in there. But when you get to stocks, let's bring up Apple, you can see that the bid and ask spread is much wider. 480, 475, so $5. I'm sorry, 5 cents, which is $5. So you can see it's a lot wider than on SPY, which is only a penny. So and obviously the farther you go out, the bigger these spreads get. So anyway, that could be what they're talking about there. Again, I don't find that to be a real bad issue for me, because it's really the skill set you're building and not actually exact perfect numbers. And what I found is the numbers are not that far off. So when I switched from paper trading to real money, my once I got kind of into the swing of things, that okay, this is real money. I'm into the swing of things. I'm doing things well. I'm building my confidence in real money now and my skill set in real money. I didn't find that my returns were so much different than what I got in paper trading. Now, commissions. Now, the paper trading platform here in ThinkOrSwim will show commissions. You can see that when you go to the monitor account statement. It's going to show, well, it doesn't show it here because there's no trade, but if I go over to the margin account in that trade, you can see my commissions and fees, and that's exactly what they charge me on the real side. So in these cases, that's true. However, if you go over to like Investopedia's simulator, or if you're using Yahoo Finance, you're not going to have those commissions. But I can tell you, from my standpoint, my commissions represent about 0.5% of the total amount of my account over a given year. Okay, so 0.5%. So if you've got $100,000 or even $10,000, you're not going to be paying $1,000 in fees. If you are, you're on the wrong brokerage platform. You're with the wrong broker. So with mine, I'm not paying that much in fees. Okay, so it's not really an issue for using an actual paper trading platform from your broker if they offer it. And then the last thing is it neglects emotional reality. And this can be true because every trade you get into, you're not really risking your own money. However, one way to get around that is to set goals for yourself. Okay, so if you're just starting out, say, all right, I'm going to set a goal to just match the market. If I can match the market's return over a given year, that's what I'm gonna work hard on, and that will kind of give you that emotional reality, and it's gonna force you to make decisions you shouldn't be making, maybe to increase your risk when you shouldn't be, because you're trying to keep pace with the market and you're just learning you're going to make mistakes. So if you put limits and goals to yourself while you're paper trading, you can kind of reduce this neglect of emotional reality, because you're putting an emotional strain on yourself just from a goal setting purpose. You can also say, all right, I'm not going to go into real money until I have 2 successful years of profitable trading. And so, and you could say 2 successful years of beating the market. I know that seems like a long time, but think about it. If you have $10,000 today and you don't spend the time building your skill set, and you jump into real money and you wipe out half of that, you are going to be far behind the person like myself that starts off at the same exact time with the same amount of money, paper trades for 2 years, and then jumps in, loses nothing, and makes money. I'm going to be well ahead of you because a 50% loss requires a 100% return on investment. So you're going to need to first work hard just to get back to break even, and then you're going to have to try and catch up to me. So I've seen this many, many times with students. I've seen it both sides, where I've seen students that have stuck to their guns and what we teach them into paper trade, and they spent plenty of time paper trading, up to 12, 18 months. And other students that only paper traded for a month or two jumped into real money. The student that paper traded the most was far ahead of the student that didn't, because they didn't have to worry about losses, real losses. They jumped into real money. They had a few losses here and there, but they were able to quickly adjust based on what they had learned from paper trading. So I am a big proponent of paper trading. So that's it, you guys. I know this went a little bit long, but really wanted to cover it and show you, give you my perspective on it. Highly suggest you go to paper trading, and like I promised, you can learn how to trade options and not risk a penny. So hope you enjoyed the video. See you in the next one.